Hello and welcome to the RAS Network. What you're about to hear and see is limited to general financial information only. Please be sure to speak to your financial planner or refer to our financial services guide available at rask.com.au/FSG before acting on the information. Luke Laretive, welcome back, mate.
Owen Rask, good to be here, my friend.
It's always good to be here chatting with you in the studio. I don't think we've done one in the studio before.
Yeah, we've done a few.
Have we?
Oh, no, not in the studio, but yeah, I think maybe
one of us have been in the studio.
One of us has been here, but yeah, it's, we're international men of mystery, mate. It's hard to catch us.
Yes, it is indeed. Actually, that brings me to my first set of questions. Best
Austin Powers?
The best coffee in Melbourne.
Best coffee in Melbourne is, well, look, I actually find it hard in Melbourne these days. A lot of the places I used to go to when I was here, really regularly, have closed. I'm currently going to 100 Flinders Lane. Which is the new little wine bar, coffee shop, make good sandwiches.
Bit of a cheeky wine before work.
It's close to the office. And yeah, they tend to let me order a wine before 9 o'clock. So,
no, all jokes aside, it is a really nice spot.
Yeah, look, it is good and make good sandwiches if you're in there for a $16 sandwich. And yeah, it's above your sort of, budget for lunch or ask when you're, saving your money. I'm happily rack up the credit card there.
Okay, number 2, best restaurant in Sydney. I know you're a man of, travel. You do a fair bit for work.
Yeah, look, I'm not a Sydney aficionado, but it's a bit of an old institution, and I go there I went there with my friend recently. Is it Hugh Bears in the city? Okay. Yep. And drank a lot of wine and stayed there until late.
Okay.
So I had a good time last time I was there, so I'll give that a plug.
Okay. The last one, which is the one that's probably easiest for you. Best beach for surfing in Perth or around Perth?
Well, there's no good beaches in Perth for surfing, but within an hour and a half of Perth, I would say some of and they'll remain unnamed, but some of the waves around Lancelin up north, an hour and a half north of Perth, there's some good waves up there. Okay. If you're not scared of big grey fish with white bellies.
Well, that's put me off, but that's fine, mate. And that sounds good. So, for those of you that don't know, Luke, native of Perth, if I'm not mistaken.
Yeah, I am.
Yeah, and now reside here in Torquay, Melbourne, or just outside Melbourne, which is a wonderful part on the coast. So, we're going to talk about 2 companies. We're going to talk about ResMed and Cochlear today, and just the general healthcare kind of industry here in Australia. I guess, for those people who don't know who you are, you've been on the show quite a few times. You're on Self-Wealth Live with me.
Forgot about that. We
did. That actually happened. And you've been on Equity Mates a lot recently.
Yep.
Tell us a little bit about your business. What do you do? Who do you serve?
Cool. So our business is called Seneca Financial Solutions. Mm-hmm. We kind of have an investment-focused financial planning and high net worth wealth advisory business. Mm-hmm. My client base, people that work with me, tend to be business owners or ex-business owners. Not exclusively. I do retirees. I do, ambitious professionals. I rip out my headphones, gesticulating too much. But so that's who we sort of service. I've been in the advice business, I suppose, now for 10 plus years. Getting old, and our business has been growing. I suppose really through word of mouth and a little bit of media stuff that we do, as you mentioned, but mainly just sort of friends of clients, referral partners through lawyers and accountants and stuff who refer me their clients that might need some help. But yeah, we sort of have an entrepreneurial focus, entrepreneurial background. So we tend to connect with those sort of other business owners out there, mm-hmm. Who maybe, are selling their business, coming to a bit of money from it as a result of that, transitioning, family businesses through generations, looking to merge or do a transaction, and kind of how that flows on to their personal wealth thereafter.
That's great. We have a lot of people that are business owners that listen to this or are in and around businesses, whether they own businesses, invest in commercial property, these types of things.
Even those professionals who kind of think of their career as a business, like that's kind of, if I was a professional still, working in industry or a tradesperson, I sort of think of those people as as business owners as well, if they think sort of entrepreneurially about what they do, they're ambitious, they're trying to grow, they're trying to do the best they can. I sort of, think of that as well. It's not necessarily the majority of my client base, but certainly they're there for sure.
Yeah. And so you have a few different offerings. One of those things is, which we can plug today, which is people can just book in with you and have a chat, like a bit of a portfolio review type thing.
Sure.
I know you've recently been doing that with the Equity Mates community too. If people have, anything they want to talk about, or companies, or
man, we can do. I mean, I'm happy to sit down with anyone really, particularly if they're in the RAS community and listen to you regularly. Give them some general advice, review their portfolio, kind of demonstrate, I suppose, the value add that we can do over time. I don't really see a lot of, as much as I know that clients do, reviewing a portfolio one time, getting a one-time piece of advice, it doesn't really help that much. What helps you and what generates sort of outperformance over time and better returns, in my experience, is a consistent, disciplined investment process applied regularly. So it's really our IP, I find, that drives good outcomes for our clients, not just one piece of IP for the current moment in time, if that makes sense. So happy to do that as a start point. And like I said, I'm trying to grow my business, so that's what I'm here to do.
Yeah, cool. And I know people from the RAS community have followed you up and invested with you before.
Yeah, we've got a few RAS clients actually from doing the various podcasts before, and it's been great for us. So really enjoy working for them, and I think that unanimously say that they've had a pretty good experience. So
cool. It's good to know. Okay, so we're going to talk healthcare. I guess the first question is a really simple one. If we just think about, a lot of people think about healthcare as a thematic, an aging population, more spending through hospitals. You go to the doctor, there's less and less bulk billing these days. This is going up and up and up. They think of this as like the rising cost of an older society, medical equipment, stuff going up. Do you invest in a thematic way? Like, do you think about your portfolios that you run as, I don't know, like, I'm going to invest in a healthcare thematic because it seems like a good broad thing to get exposure to? Or do you think otherwise?
You know the answer to this, but
go for it.
No, is the really short answer. I think that having a really good understanding of what drives earnings will help you forecast with greater certainty and with higher probability of positive outcome share prices. But if you can't, and if you're forecasting earnings and share prices follow earnings, those tailwinds make your margin of error and margin of safety a little bit better. But certainly I don't think about investing in a sector. We might look at something like the Medicare data that comes out every month and think about, okay, well, what's a reasonable rate of growth we could expect for CSL or Integral Diagnostics or Sonic Healthcare or whatever. We might look at how much CPAP machines are getting adoption globally and the size of the addressable market. We might look at cochlear implants and how that market's growing steady, and whether it's reasonable to think that Cochlear are going to win any more market share in that. They're all relevant to the thematic, I suppose, but it's not the basis of which we invest. It's a data point for us to help us better forecast earnings.
Yeah. Okay. That makes a lot of sense. And for what it's worth, it does. Those are wonderful ways, because some people, particularly when they're newer to investing, they don't understand how you would make a forecast. But when you have those types of data points, you can kind of piece it together over time. I've got another question, which is kind of a sub question to that one, which was, as you've been doing this for a long time, or even though you don't kind of target healthcare as a thematic, so to speak, do you see some parts of the industry are more appealing than others, like global healthcare, Aussie, software versus hardware? Over time at Seneca, have you made more money in any particular way?
I think we've made money out of healthcare a number of ways. We've also had, a handful of things not go our way, as is the nature of investing, I suppose. But if I sort of think back around what's worked for us, I think it's understanding, like you said, finding those structurally supported segments of the market. And that's not necessarily with, it's not aging population that I'm trying to say when I say structurally supported. It might be like the way insurance is working in the medical sector now. It might be a way that, the government is pushing people to do something or, incentivizing something. At the end of the day, that's really, you kind of get into the root of how we do things at Seneca. We love to think about incentives. And I suppose in healthcare, the government, the regulators, the insurance people, the operators themselves all have kind of incentives to do and not do certain things. And we kind of want to try and figure that out early. And, that allows us to easily forecast where earnings may go based on how people are going to behave. So that's sort of, in short, what's worked for us in terms of stocks and global, local, blah, blah, blah. I think quality is probably the theme in healthcare that has worked for us. Now, I'll put a caveat on that and say that it's been in an environment where quality and growth have done well historically. If you look at the most recent sort of, 10, 15 year kind of period, I'm not sure that's necessarily we're just going to get a free re-rate on quality going forward, to higher and higher multiples from here. But certainly businesses that are able to, just like any sector, grow market share, maintain or expand margins in a growing addressable market generally do pretty well.
Yeah, absolutely. So in the lead up to today, just chat off air before, you mentioned that you sold a business, which is Sonic Healthcare. But there are a few names here in Australia. Two of them we're going to cover, obviously, which is Cochlear and ResMed. You mentioned CSL before. Are there any other names that people should probably just have on their watch list, even if they don't buy them? Companies that you think have popped up time and time again?
I think in large caps, we're going to talk about ResMed, but hint, hint. I think that's a pretty good stock to buy and to own at the moment, based on valuation sort of grounds. Outside of that, like CSL is probably the only other sort of large cap in the ASX 200 portfolio that we run that you would say is a pure play healthcare sort of situation. I think in the smaller end of the market, in the small cap fund, we don't have a lot of pure play healthcare. We've got some life sciences stuff, some insurance stuff, but nothing that's really pure play small cap healthcare. We've seen, I saw an interesting company today that's, coming to market shortly. And there's probably 5 or 6 companies that are in the small cap fund universe that we're sort of like considering at any given time. It's really just a question of price. And I think that's you've got to have a positive expected return for these things to be able to buy them, regardless of whether you think it's a great business or not. Do
you, in terms of, I think it's going to come up quite a bit, is this idea of valuation. In terms of the way you go about that, is a lot of your work to do with the IRR method, which you just mentioned, so like internal rate of returns, which we've spoken previously about time spent in commodities and mining and that sort of stuff. But is that primarily a method that you use, or do you use things like discounted cash flow analysis? Is there other ways you think about it?
DCF's useful, but less useful, I think, in a lot of these sectors. I think if you're talking about large cap healthcare, I kind of think of it like most other sort of industrial sectors. It's just like next best alternative. Is this business a lot better than the peer or the peers that I can buy? Is it trading at a premium, a discount to those peers relative to how it normally trades? And do I see a reason, or do I have a catalyst to justify buying this business that something is going to change here? So we're always looking to think about, when it comes to large cap, what does everyone else know in the market? What's in the analyst reports? What are the brokers saying? What do we know? Is there anything different? And what's the best way for us to exploit that difference? So, we want to only invest in companies where we think we've got an edge, where we know something that maybe not only we know, but few people believe that isn't in the price. And I think in those scenarios, that's when, you've got the best chance of making a quid.
Let's move to the two companies. So we've got Cochlear and ResMed. I like to take them in that order if we can, because I know you've written about ResMed a lot for us, but also just around the traps generally. And we can refer people back to the Rask website. You can get in contact with Luke, of course, as well. But Cochlear is a business that has crept up on many people's radars probably a dozen times if you've been following the ASX for long
Gone
enough.
up a lot.
Yeah, and it's one of the best performing businesses in the country. Been around for a long time. People are familiar with, the kind of little devices that sit on the back of people's skulls, help people hear. Can you tell us a little bit more about the business?
Yeah, I mean, like you said, they help deaf people hear, essentially, which is pretty rad. If you kind of,
listen to this podcast, perhaps.
Yeah, exactly. Which, I think it's arguably, like you said, one of the great Australian entrepreneurial success stories. It has 60% market share of that hearing implant market. So it is the dominant player. It's got its main competitor is this company called Sonova. They're listed in Switzerland. I think the code's SOON. And, Cochlear is a business that is now, in my view, just priced for perfection. I'm not saying anything negative about the quality of the company. I mean, the narrative in the market's pretty straightforward. Dominant market position, large moat, implants are growing 10 to 15% per annum, and management are chef's kiss, So, it's worth paying almost any price for this company. Yep. Well, I just don't agree. Not because I don't agree with any of those sentiments or that particular narrative. I just think everything has a price. If you start to get down to the nitty gritty and the results of this business, I think that, you can start to see maybe why I sort of think that way, I suppose.
How so?
So like going through, say, like the most recent result, you can sort of see that the level of sales that the business is currently achieving aren't really sustainable. I mean, they did 17% margins on 20% revenue growth on sort of 14% unit sales growth. The industry's not growing that fast, and they're the dominant player, so they can't just continually win every ticket that's out there. So we think that maybe like a 6 or 7% CAGR from here is probably more in unit sales is more maybe realistic. I think also you can't continue to grow at this scale ahead of those kind of rates of growth, and margins can't really go much higher. So for a company that's on 45 times earnings versus its long run, or I think, hold on, let me check my numbers here. It's on 53 times earnings versus 32 times average earnings over the last 5 years. Its peers on 26 times earnings versus median 21, same period. Consensus price target for this thing's 287. It's trading at 345. Yeah. So you kind of start I'm not the only one who thinks this thing's a bit overvalued. And I just think there's, the buyback they've sort of suspended, which is kind of the other thing from the most recent result. Like, take that as instruction, right? Management are saying that our stock's not good value to buy back right now. So they've got the cash for it, just not doing it. So, I think that's instructive. And then there's this Moderna phase 3 trial vaccine, which, also has potential to disrupt Cochlear a little bit, maybe a lot, some people think. Oh, look, I'm no expert. That's not my wheelhouse. I'm not going to pretend like I know the likely or unlikelihood of that. All I will say is that any uncertainty or increase in uncertainty around a stock at a very high valuation does leave it susceptible. And this, ResMed, which we're going to talk about, we can almost use as a case study.
Yeah, we'll get to that in a minute, because I think that actually is a great segue where something's, being tested and being used, and the kind of impact that it has on a highly valued or highly priced, I should say, healthcare company, which we saw in 2023. For those of you that don't know, we'll get to that in a minute. One of the things that I've always liked about Cochlear is the fact that the business is like a hardware leader and has shifted into software similar to ResMed in that way. But one thing that it's kind of always concerned me is how dependent Cochlear is on. It's both a blessing and a curse, because it's kind of dependent on audiologists working with surgeons to recommend Cochlear and being able to use it. And obviously they want to use it because it's been in the market for so long. But it also then creates like funding challenges, because these things are very, very expensive. For anyone that's got one or knows someone that has, they're extremely expensive. And that type of, I guess, down the line, looking at like insurers in the US, that kind of spooks me a little bit.
Yeah, fair enough. I think it's been a I don't think anyone in the market is worried about that at the moment. But certainly when you start to pay 50 times earnings for something, you want to be not just comfortable with the sustainability of those earnings. You want to be red hot on it. You know what I mean? Like,
yeah, for sure. They did a cap. I'm pretty sure they did a cap raising in COVID.
They did.
And obviously then later on that probably turned out they didn't need to, but I remember they were being very conservative at the time.
It's like the most conservative company. Oh, it's right up there.
Yeah.
Yeah.
I can't think of anything that's probably more conservative off the top of my head.
I can think of people who are more conservative, like management teams, but not necessarily as an organisation. I think they're super conservative and a board.
Yeah, right. Do you know, can you name them?
Oh, you know, engineers at Woodside aren't exactly risk takers.
Okay.
You know,
right.
they might like drilling wildcat holes out in the middle of the ocean somewhere, but it's all pretty safe and pretty above board. So, and, you know, certain as those things can be.
Yeah.
But look, I always give Woodside engineers a hard time. So I'm sorry to all the Woodside engineers out there.
Could you see yourself owning Cochlear at a price?
Yeah, for sure. I think like all else being equal, if I could buy this on 30 times earnings or less.
So still a premium, but not a huge premium to the...
Yeah, like an average multiple, I'm happy to punt that that trial.
Yeah.
You know, given the business got pretty good momentum, you know, I know I'm going to get 5 to 10% growth out of this thing. Mm-hmm. I know the margins are going to be there or thereabouts. And it's probably got some cost out potential as well. Mm-hmm. So, yeah, look, I feel pretty comfortable with it, but just not at these prices.
Yeah, that's fair enough. Because it is, like, if you go through and you run through a business quality checklist, it would tick basically every single box, except then you get to the last thing, which is valuation. So no knock on the quality, but more so just on the valuation per se. You
know, like I use the analogy, not about Cochlear, but with a client the other day. He's telling me about a stock and, you know, ranting and raving about how great it was. And I sort of said, oh, well, okay, here's an example. Houses in Toorak are great. A mansion in Toorak is fantastic. Is it worth $1 billion?
Probably not.
No. Well, same thing. You know, some companies are great companies, but they're not always worth the price that they're trading at. So I just think, yeah, it's the market can get ahead of itself. Momentum is a real and serious thing. And I think, you know, at the moment we're seeing in the markets, I think retail coming back to the markets for the first time in a little while after a bit of a hiatus, I'd say, for the last 12 months.
When you say retail, you mean like retail investors?
Yeah, retail investors and you know, self-directed investors. And I would argue that a lot of it's chasing the stocks that have done well recently. And we're starting to see this sort of blow off top in a lot of these have done well recently momentum names. And that's throwing up opportunities elsewhere that maybe are a bit unloved.
Imagine $1 billion mansion in Toorak. I'm stuck on that for a second.
It's slightly smaller than your place that you've got, Rasky. It's only slightly smaller than your place.
Yeah, imagine that.
It's a little bit less money than you spend on your joint.
If anyone that's not from Victoria, maybe you could just do Google Street View.
Peppermint Grove,
St George's
Double
Way.
Bay, like, you know, pick a location.
Yeah, it's a special place. I wonder when we're going to have the first $1 billion mansion in Australia. Probably not that far away. Probably in our lifetime.
I hope not, Owen. I hope not.
Anyway, we digress. So ResMed is a business that do you own right now?
Yeah, we own it. Yeah. We own it. We like it.
For people that don't know it, can you tell us what it does?
Yeah. They treat sleep apnea. So they make those the CPAP machines and the masks, and they have some software as well for like out-of-hospital data for clinicians. Okay.
So if I'm suffering from sleep apnea, my GP might send me to a sleep clinic or something like that.
Correct. Get prescribed or, you know, recommended to get a machine, and they help you open up your airway and breathe during the night and not stop breathing in intermittent, the way sleep apnea works. Yep. And so you would put this machine on beside your bed, and then there's consumables element to it, right? Like it's not just the hardware you buy it once and go away forever. There's a bit that you can keep on paying. Yeah, so the devices are kind of lower margin, the masks are higher margin, and obviously the software as a service they have as well, which is kind of a growing part of their business, is also useful, and I think is starting to build a bit of momentum. They're not the only ones who do it. There's Philips who also do a similar thing, and Fisher and Paykel Healthcare, which is also listed on the ASX and NZ in New Zealand. So, look, ResMed's essentially been, in quote marks, disrupted by Ozempic, and we've seen the company multiple fall from sort of over 30 times to kind of under 20 times now on an EV to EBITDA basis. So, the business has significantly derated. We've sort of seen that as an opportunity to get set in this business. And, whilst I acknowledge the threat and potential benefits of Ozempic and GLP-1s, certainly I think the addressable market here, the growth in the market, the complementary nature, blah, blah, blah. There's a bunch of things we can talk about, make ResMed pretty good value at the current prices.
So this is one of the businesses like Cochlear that's been on the ASX for quite a while and has an absolutely amazing track record.
Yeah, made people a lot of money.
Yeah, compounding top line, it's got great margins, like wonderful cash flow. It's just a beast of a company.
Yeah, Peach.
And then 2023 hits, or late 2022, 2023, do these things like Ozempic where people starting to talk about it. 2023, people start to get really worried. Stock falls. What did you do then?
We didn't own it, so.
But what did you do to determine that it could be something that you should look at? Like, what did you go back to the trials? Did you? Yeah,
so we just read, I suppose, the bear thesis. Tell me all the bad news is probably always a good place to start. So we just read the bear thesis and then sort of verified that against where we thought the size of the addressable market and the penetration that, ResMed had. And I suppose it's a little bit of a unique situation in the sense that, ResMed's major competitor in Philips had a product recall, and kind of all consumer and clinician faith in those particular masks and products is pretty much out the window. So ResMed have had a free run at the market essentially, and I suppose being able to sort of start to take advantage of that.
Yeah. At the same time, then, or just after that, then Ozempic hits, and for folks that don't know, Ozempic is one of the brand names for drugs that help people lose weight.
Yeah, GLP-1s, essentially what they do is they stop you from having cravings to eat. And it's a huge market. If you go look at like the Novo Nordisk share price, and Eli Lilly are now doing a trial for another GLP-1, which is similar wheelhouse, but they're talking about the multiple sort of applications of these particular, or the ability to control cravings and to suppress the way that we feel about stuff. So you can kind of start to think, this could be huge, and a huge disruptor to a lot of the healthcare complex. And look, I actually don't disagree that that's probable. I think, GLP-1s are going to be a game-changing sort of Uber level disruption. But there's also the time in the middle, and there's also, the size of the market we're talking about here, and relative to the size of ResMed as a business. So, because
ResMed's management have seemed to suggest numerous times now, and they seem to, from the transcript I read last reporting period, they were basically going at pains to say, let's talk about something other than, Ozempic.
Yeah, they've gone a bit more on the offensive at the latest result. So like they're citing the thing that all the analysts are writing about, and the thing the management talked about, is this study that's been conducted, and it's that people are 10% more likely to use a CPAP machine when they're on a GLP-1. So it's not sort of necessarily either or, but it's both. Yeah, and that's what management have been saying. Yeah, and look, I mean, the study's there. They've done it's not. They're not lying. So, I'm a little bit comforted by that. But I'm more comforted by the fact that there's 1 billion people in their addressable market, and there's 23.5 million ResMed devices out there. Yeah. So it's a very, very big market. It's growing as well. Now, not saying that growth rate, you don't need to be conservative. Maybe that there's less obese people out there, less instances of sleep apnea as a result. But, they did 13% EPS growth, 5 to 7% consensus upgrades across kind of the analysts in the market at the last result. Margins are up 90 basis points, really good cost control. And the Philips thing's kind of still, I mean, they just had this thing with the DOJ or whatever. We don't have to go into detail, but essentially they're still a bit stuffed, for lack of a better word. So, Cochlear had a product recall. Yeah. I think it took them 8 years to get back to where they were before. And I mean, the market's been pricing the Philips recall, I think, like they're going to get back to earnings within 2 years. And I read one report and it said like, oh yeah, we think that by end of 2024, Philips is back in the market. It's like, well, is that really likely? And, in our view, probably not.
Yeah. Yeah, I feel like healthcare takes a long time.
Bro, no one takes risks with this stuff, right? And you don't buy 2 CPAP machines.
Yeah.
Like, it's just, you just buy them once. It's like the Cochlear thing, it's expensive.
Yeah, pay the extra $100 or however much it is.
Whatever it is, you don't care.
Yeah.
Right? The guy, who looks after you has recommended the ResMed one because the other one had a recall. Well, you don't be like, oh, no, I'd rather buy the Philips one. Like, it doesn't happen.
Yeah. And in terms of, so this was an opportunity, and I looked at the share price chart. I don't have it in front of me here, but this was an opportunity to effectively buy the business at a price. Like I remember talking to members about this. It was effectively a chance to average into one of the ASX's best businesses. And you mentioned Cochlear with the recall. I think that was like early 2010s or first half of 2010s, I think. You don't get opportunities like this or like that very often at all.
No, and I mean, do I think this is going to be on 30 times earnings anytime soon? No. Or 30 times EV? No, I don't.
So not back to the kind of exorbitance.
I don't think anyone reasonable would make that argument. I mean, he might be able to, but I doubt it. What I would say though is that buying it on 15 or 17 times EV to EBITDA is too cheap. Now, where you want to sell that stock, what you think the right number is for it. If you want my right number, come and pay me and I'll help you. But the reality is that there is a number there, and I think there's plenty of money to be made between here and there for sure. And if you had to, if I was buying, if you said to me, oh look, you can buy ResMed with the GLP-1s out there in the ether, doing the kind of numbers it's just done, and what it's been able to do historically in the sector where it is, with the tailwinds it's got, 20 times EV to EBITDA. I mean, there's a lot of shit businesses trading on 20 times EV to EBITDA.
Yeah, true. There is. And
it's not a stretch.
Yeah. Like I said, I think it ticks all the boxes for being quality, similar to Cochlear, except this one you're buying at a valuation that's much more compelling, historically speaking, and in the context of what also is available on the market. Quick question on that. So when you think about your valuations and these types of things, particularly like a business such as ResMed, are you thinking, what does a peer group look like? What does the average look like for the ASX, that type of thing?
I think when you've got established businesses that have consistently re-rated higher, you just need to ask yourself, what other businesses can I buy on similar multiples? Does this business look any better or any worse than those? So, I don't need to do a lot of bottom-up work on ResMed. We've kind of got our base case models there. I've just got to check a couple of things, and I kind of know what I can get for a mid-teens EV to EBITDA multiple, and I know that's a good buy. Do you know what I mean? I think, there's a bit of maybe learned knowledge there. If you're a first-time investor or you've been investing for 12 or 24 months, you're not going to have that. Just
the pattern recognition.
Yeah, that you can just click your fingers and know stuff. But in the same way that sometimes you read company announcements or you go through a deck and you're just like, oh, this sounds sus as. I don't really know why necessarily or whatever, but you can go, you go back to it and you're like, oh yeah, that and that and that. And, it's just kind of like knowing what you know. If you watch sport, you'll know, you can see a pattern in the game and the momentum's turning. Not really sure. Couldn't put my finger on a specific thing, but I can just tell you that, that they're going to make a comeback or, that the momentum of the game's changed. Same sort of thing.
Yeah. So final question on ResMed, then I might just ask you for some other ideas or something else that's on your mind. When you think about a business like ResMed or something like this, like, and just across your portfolios, typically how long do you own a large cap business for? Like how long, what is typical for you guys?
As long as it takes to kind of realize the value that we think is there to start with. I mean, or the thesis breaks and we're wrong. So, you know, some of the stuff we've owned since inception in the Aussie Large, and I can't really see a scenario where we would sell it out.
When was inception?
3.5 years ago. I think we're up 4 years on the 17th of June.
Yeah, right.
So, so I mean, does that mean we've never sold shares in ARB? No, we have. Have we never bought shares? Yeah, we've bought and sold lots. But the point is that it's not. There's always a core position there. There's always a holding of some description, because we think it's a good business that can steadily compound and generate above market returns consistently. So we own it.
Mm-hmm. Cool, like it. But
yeah, some stuff's there for 3 weeks.
Yeah,
is the short answer, and other stuff's been there for 3 years.
Yeah, I guess I wanted to ask you a question about other businesses that might be on your watch list. But people, as we mentioned at the top of the show, something that Luke and I wanted to experiment with is a lot of times with the podcast we get guests on, and not a lot of people always feel like they should follow up in these types of things, but. Luke's happy to be the guinea pig for this session, and if you want to,
may regret this, but yeah, go on.
If you want to follow up with Luke, if you want him to do like a portfolio review, if you want to have a chat with him about companies, there will be a link in the podcast player, and you can take him up on that. It goes to a booking link, so feel free to blow up that link for him and just get in contact with him. And hear what he has to say about different businesses, or just
I want to hear what
him.
you guys have got to say too. Like it's not, it's not a one-way street.
Yeah, exactly. So one of the things that I was going to talk to you about, the question I was going to ask you is about one of the more exciting ideas that you have in your portfolio right now.
Yeah.
But
you want a large one or a small one?
One of each.
I knew you were going to say that.
But before we get to that, anyone listening to this, Luke will be back regularly on the show. So you can write into us and request companies that you want us to take a look at. We obviously are going to screen companies pretty heavily. Like if you're talking about a micro cap that has no revenue, it's not really in the interest of anyone.
Unless I'm a major shareholder and I want to ramp it up.
Yeah. But all jokes aside, we want to talk about quality businesses on the show. Like, doesn't have to be a blue chip like ResMed or Cochlear, but we do want to talk about good businesses with good prospects for the long term. So send them in. Let us know. There's a link in your podcast player that says "Ask a Question." Select the Australian Investors Podcast.
The goal is to try to help people make better investment decisions.
Yeah.
At the end of the day, rather than just like talking about hot stocks. I think I'm trying to look at my list here, thinking like, well, what can I pick from here that's not just I think it's going to go up a lot, but also like instructive in maybe like some concepts that you can kind of take away.
Okay, give us one.
Okay, so let's do Mermaid Marine. Well, it's not called I should use a proper name. It's now called MMA Offshore. Mm-hmm. It used to be called, for back in the day, Mermaid Marine. It's in our small cap fund. Mm-hmm. The code for it is MRM. Do you know this business?
Oh, years ago. I remember when it was called
It's been around for a while. Yeah. It's like a bit of an old one. It's really, it's pretty simple. It's a tugboat business, right? So I know that kind of probably doesn't inspire anybody to greatness, but it is actually quite interesting. So essentially, if you've got an oil and gas platform and you need to drag it around the ocean, that's what they do. Or you want to drag stuff in the air in the ocean, you use a company like Mermaid Marine. It's a very cyclical business, and if anyone goes back and has a look at the share price chart, you'll see it fell off a cliff. Yeah. And it was a terrible, terrible, terrible investment for a long time. But oil and gas and mining, and other sectors too, they have these capex cycles. And, we have high prices and everybody invests at the same time. Everyone's chasing labor, chasing staff, chasing equipment, and then the stuff either gets built or it gets wound down, and all of a sudden there's excess equipment, excess labor, and then you have this period of demand where things are in shortfall again. Then there's investment, and off we go again. Tugboats are actually no different, and we've had a sustained period with low energy prices and low oil prices for a long time, where no one's been building these tugboats and no one's got them essentially. So, but now we're seeing the drilling activity pick up, oil and gas activity pick up, and Mermaid Marine have just gone from strength to strength and just essentially upgraded and beat earnings again recently, and the stock's gone from like $1 to $2 now essentially, and I think we bought stock at $1.40 or something like that, and I can It's cool because you can actually use history here to learn. So you go back to the last cycle or the cycle before, it's been around a while, so you can actually do it, and go have a look at the peers around the world who do similar things, and you'll see that they can generate 30 and 40% margins pretty sustainably at the top of the cycle. Okay, so if we think the top of the cycle's still ahead of us somewhere, which is our thesis, and we know that they're going to earn 30 to 40% margins, we know roughly how much work they're going to have as well. So I roughly know what their earnings are going to be. And if I run that on a conservative multiple for the company, I can get like $3.30, $3.50 a share.
Yeah, right.
So I can see a multi-year kind of cyclical upswing for MRM, and that's why we own it and that's why we like it.
Yeah, right. And I'm glad you kind of started with like the risk side of it, because it is a cyclical business, as you mentioned.
Super cyclical.
Actually, 2 tugboats went past me while I was fishing the other day. Funny story. I've never seen one in my life, and they went past me. They are enormous if you haven't been beside one. And the wake that those things create, unbelievable.
I got a couple of mates and they spend, half their sort of time driving those things, getting paid a fortune, and then they go and drive the super yachts in like Monaco and stuff, and they don't get paid very much, but obviously have a peach of a time.
Yeah, you have a great time. Yeah. They're bloody enormous, those things, and you don't really appreciate it till you're up close with one. And
no, they're big thing, big bit of kit, long lead time to be able to catch up to the demand cycle, and not saying that that's not going to happen. It will, but the incumbents and the people with stock and availability end up being able to charge higher and higher prices for a period of time because the lag's quite slow.
Okay, so that's MRM. Should I push you for another one, or should we just refer everyone just to get in contact with you? Easy.
Yeah, 45 minutes. I will happily do 2 more with anyone who books a meeting with me.
Okay, pretty.
I'll do them one by one, and we can do something in a sector that people are interested in or whatever. Because I'm sure they're sick of listening to me for 45 minutes.
No, it's good. So we've been through Cochlear, which is just expensive. It's just a wonderful business, just expensive.
Yeah, don't get upset if you own it. Like, great. Yeah. But, I think if you do own it, I'm not buying it. And as I always tell people, there is no hold in investing. There's only buy or sell.
Okay. I'm a long-term holder type of guy.
No, but you're either rebuying at today's prices or you're selling.
So the intuition there is like you would be prepared to
repay for today, because the alternative is essentially, because there's no friction in transacting.
Other than tax.
Yeah, but I hate investing for tax. Like, I would rather just buy the stuff I like. Sure, you've held it for 43 days. It's probably worth holding it for 45. Sure, you've held it for 362 days. It's probably worth holding it for 365. But, and I'm not discounting the tax side of it from an advisor's perspective, but I think you've just got to be focused on, your tax benefit could be gone in 2 days of bad trading, and all of a sudden you're not happy. So, yeah.
Fair. So we talked about Cochlear.
Mm-hmm.
We talked about ResMed, which is stacking up quality-wise, and the valuation seems to be there.
Yeah. Not without risk, though, I think. It's important to
you mentioned
out.
Like
that's why it's trading where it is.
GLP-1s, all these types of things that it's important to be aware of.
Mm-hmm.
And then finally, MRM is the ticker symbol for Mermaid Marine.
Well, it's MMA Offshore. Is the name of the business now. But yes, it's the old Mermaid Marine.
Okay, Mermaid Marine. If you do like Mermaid Marine, write into us, let us know. Or if you do work at Woodside, if you're an engineer, let us know in the comments on YouTube.
The Sandgropers are going to whack me. Sandgropers are going to whack me. I apologise, everyone in the Western Australian Illuminati.
Let him have it. And also, he's given us some beach and restaurant tips as well. So next time, I'll see how that goes in Sydney. I don't know if it sounds quite shoe-bears.
It's expensive.
It sounds like.
Get your checkbook out.
Yeah, okay. I don't have one.
I'll tell
That's probably indicative
next
of where
time
I'd go.
I'll go with you. We'll go next time we go to Sydney. I'll
put it on you though.
Put it on the Seneca card.
Yeah, for sure.
JB's Amex.
All right. Luke, it's always a pleasure, mate. Thanks for joining me.
Thanks, Alan.